Hello and welcome to part 6 of the Credit and Debt Management Workbook series. Today's topic is on student loans. Student loans can help, but they can become a financial trap if you're not careful. Today we're going to break down student loans so you know how to make smart moves with your education money. In this presentation, I'll be talking about student loans and whether it could be a good or a bad debt. I'll also be talking about funding your education, student loan systems in Canada, how Canadian student loans work. In addition to that, I'll be talking about repaying your Canadian student loans, tips to reduce your student loan debt, and then I'll conclude the presentation with the key takeaways. Now let's talk about whether student loans can be considered as a good or bad debt. In terms of a good debt, if a student loan can help you get a degree that leads to a good paying job, it's considered an investment. Education can open doors and change lives. In terms of bad debt, if you borrow too much or you can't keep up with your payments, loans can become a heavy burden. Think of it like this. Borrowing for school is like borrowing to buy a car. If the car helps you to get to work and earn money, that's great. But if you take out a huge loan for a fancy car that you can't even afford, it just sets you back. So remember to make smart choices. Now let's talk about some ways that you could use to fund your education. The first way is through employment. Think about getting a summertime job or even part-time work can provide income to help you pay off your student loans. Another strategy is to apply for co-op programs as they are paid work experience that are related to your field of study. You can also apply for grants and bursaries as they are considered as financial aid that can help you pay off your student loans, and on the bright side, they don't have to be repaid. Now let's talk about some student loan systems in Canada. First off, there are federal loans, which are managed by the Canada Student Financial Assistance Program. There are also provincial and territorial loans, which are managed by individual provinces and territories. It's important to understand the different loan programs available in your region. Now let's talk about how Canadian student loans work. First off, there are grants. If you qualify for a student loan, you might also get grants, which is basically free money. If you're a student living in Ontario and you're attending a post-secondary educational institution, then you can apply for the Ontario Student Assistance Program, also known as OSAP. However, the amount that you will get depends on your financial situation. And in terms of the repayment process, this is usually 6 months after you leave school. Remember, just because they offer you a big loan doesn't mean you should take the full amount. You should only borrow what you absolutely need. Now let's talk about repaying your Canadian student loans. I want to mention that the repayment process happens 6 months after you graduate. The interest rate is also either fixed or variable, so make sure to explore your options. You can also make lump sum payments, which means you can pay off your student loans faster by making payments while still in school. It's important to plan your repayment strategy to minimize interest. Now let's talk about some tips to reduce student loan debt. First off, you can create a budget, and this can help you track your expenses and identify areas to save money, basically tracking every dollar. You can also seek financial advice, which means consulting with a financial advisor for personalized guidance. A budget isn't about saying no to fun, It's basically about knowing where your money goes so that you don't stress later. Now let's look at the key takeaways. Student loans can be considered as good debt if it's used wisely. It's also important to look at all the funding options before you borrow. It's also important to plan ahead for repayment so that there is no waiting until it's too late. Education should be a stepping stone, not a financial trap. So be smart with your money today so future you doesn't struggle. Now let's talk about the next steps. So what I want you to do is the next time you're considering student loans, make sure to review your loan options carefully. Create a realistic budget, seek professional financial advice, and manage your student loans responsibly for a secure future. Now here's a pop quiz. The first question is, which of the following makes student loans good debt? Is it option A, they help finance education and increase earning potential? Is it option B, they never have to be repaid? Is it option C, they have no interest charges? Or is it option D, they can be used for anything including luxury purchases? Question 2 is, when does repayment for Canada student loans typically begin? Is it option A, immediately after receiving the loan? Option B, 6 months after leaving school? Option C, only after securing a full-time job? Or is it option D, 10 years after graduation? Please take a few minutes to answer these questions. Pause the video. And once you have the answers, please unpause the video and I'll share the solutions. Now let's talk about the solutions. The answer for question 1 was option A. They help finance education and increase earning potential. Student loans are considered good debt if they lead to better job opportunities and higher future income. However, mismanaging them can turn into bad debt. The answer for question 2 was option B, 6 months after leaving school. The repayment of Canada's student loans usually starts 6 months after graduation or leaving school, giving students time to prepare financially. This means planning smart, borrowing only what's needed, and working hard. And make sure that the education works for you. Now go out there and secure that future without drowning in debt. Thank you for listening to this presentation.